Good morning, students. I am Dr. F.Andrews, Assistant Professor, St.Joseph College of Arts and Science, Cuddalore, Autonomous. Today we are going to see royalty account. Royalty is an amount payable by one person to another for the use of an asset or right or monopoly. It is a periodical payment in the nature of rent made to a person for the right to use of certain property such as patent, mine, copyright, etc. When a person, that is leaser, having an exclusive right to some kind, surrenders it to another person, that is leasee, in exchange for a certain amount calculated with reference to output or units. Royalty is payable by the following person: by the leasee in mining business to the leaser, that is owner, of the mine for having been allowed to use the mine to extract minerals. By publisher in publishing business to authors of books for having been allowed to publish the books. By the manufacturer license to the owner of patents having been allowed to manufacture articles. It is the actual rent calculated at the agreed rate based on output from mine or number of units produced or sold. Royalty is a nominal account. It is debited in the books of the party paying, credited in the books of the party receiving. Royalty is a revenue income to the lessor in the nature of nominal account. It is credited to royalty receivable account and transferred to the profit and loss account at the time of closing the accounts. Some technical terms. First one, minimum rent or dead rent or fixed rent. This is guaranteed minimum amount payable by the lessee to the landlord, irrespective of the actual output or sales of the lessee. The minimum amount which the lessee has to pay each period even when the mine is not worked. The landlord will not accept anything less than the guaranteed minimum. In any year, if the actual royalty is less, landlord will claim this minimum amount fixed. Minimum rent in case of strike. When there is a general strike, the minimum rent already fixed should be reduced, proportionate to the period of strike, and then merged into royalty. This is minimum rent in case of strike. Short working or redeemable dead rent. Excess minimum rent over the actual royalty paid to the landlord is known as short working. It does not arise of the actual royalty is more than minimum rent. Recoupment of short working. The landlord permits the tenant to recoup the short working in specific period in future only out of the surplus royalties. The right to recover short working as per the agreed terms is known as recoupment of short working. The methods of recoupment. The rate of recoupment can be fixed recoupment and flexible recoupment. Fixed recoupment is lessee may be allowed the privilege within the fixed number of years initially. For example, recoupment in first 4 years. This means short working of the first year can be recovered in the second or third and fourth year. Any short working of the second and third year also must be recovered in the third and fourth year. Otherwise, unrecovered short working will be lost to the tenant. Flexible recoupment. This method, any particular year's short working may be allowed to be recovered in the subsequent 2 or 3 years. This method gives the tenant or lessee a permanent privilege. For example, if the short working are agreed to be recouped in subsequent 2 years, they can be recovered fully or partially in the next year or subsequent year. At the end of the second year, any unrecovered short working will be lost on the lessee. Short working, lapsed or written off. The amount of short working unrecovered by lessee within the agreed period of recoupment. It is a loss of lessee and a gain to the lesser. For example, out of 50,000 short working, the lessee is able to recover 35,000 within the agreed period. The balance of rupees 15,000 will be short working lapsed. Sublease. When the terms of original lease gives power to the lessee to sublet part of the land or right to another person, this privilege known as sublease. In such case, the same person will be serving in two different capacities. The original landlord will royalty from the lessee in respect of production, not only the lessee but also the sublessee. The sublessee, there are three parties in this type of transaction: landlord, the lessee and the sublessee. The rate of royalty is usually different between original landlord and tenant and the tenant and sublease. So the gain is transferred to the profit and loss account. The lessee is responsible to pay the royalty to his landlord on the entire output himself and sublessee. Thank you.